What's up, you guys? It's Rob here. Today we're going to be going over ticker symbol AMC. We'll cover the charts, we'll cover the Vortex, we'll cover Stonko Tracker, and then we'll take a look at the short volume. And I'm going to try not to keep you guys too long, so let's dive into this video. Remember, hit that like button, hit that subscribe button, make sure that you ring that bell for the YouTube algorithm. It really does help me out. Now, taking a look here at the charts, AMC is doing a great job of respecting technicals here. We had a nice technical test of a level of resistance here at 1390. Got rejected off of it, broke it through, claimed it as level support. And AMC is doing very technical moves. We're having nice rips, followed by a pullback, followed by consolidation. And this is things that I like to see within the stock. It shows that the stock is very healthy and it's looking like a normal stock. It's not looking like a meme stock. Now, we did have a nice period of consolidation here during the day. We did have a rip here later in the afternoon and had a very bullish consolidation between 1530 and 1576. Absolutely phenomenal. And then we followed it with a nice rip here into the close. We closed at 1641, so we do have a resistance here. Nearest resistance is 1653. Nearest support is 1576 in my personal opinion. So I'm really going to be looking at these levels coming into tomorrow. We did close after hours at 1708, so we are above that 1653. So if we do open the day tomorrow, 9:30 Eastern Standard Time, above 1653, I'm going to look for a test of that support just to validate it's there. It could be simply like we did here today, where we literally just test it, and if we get if we bounce off of it, great. We validated it as level support, and that's what we need to do from a technical analysis perspective. But let's hop out here to the 5-day, 5-minute. We want to talk about stair stepping. We've consolidated. We made a nice move yesterday, and we made a nice stair. We made a nice move today, and it's a little bit bigger stair than what it was yesterday. And today, pretty much the first half of today mimicked yesterday to a T. We had a rip followed by consolidation. Rip, consolidate. Definitely looked like it on the chart. Now, our indicators here are definitely a little bit overextended. The RSI is sitting at 59. The MACD is incredibly overextended here. Just because a 20% move today is a very volatile move within the stock. And the periods of consolidation definitely did help out. If we didn't consolidate, then these indicators would be a lot more overextended in my personal opinion. Now, taking a look here at the 1 month, 1 hour chart, and I really want to take a look here and just see how far we've ripped. We've ripped above our last level that we were rejected at. We were rejected at 1580. Today, we had a candle close above 1580. Awesome job, guys. Like, we're on our way to the moon here. Yeah, our RSI here is overbought. Our MACD is, yes, overextended, but we're starting to get to the point where technical analysis is starting to become less and less valuable to the stock because we're starting to get into the points where we're becoming in uncharted territory. Really, anything above 1635 is becoming uncharted territory because the next point that we have to refer to is the short squeeze. And once we get above 1734, it's $20 that we can really look at as a technical point. And then after that, it's any man's guess at that point, really. But the thing that I want to take a look at for tomorrow is it is possible we could see a pullback. So let's pull out our Fibonacci retracement here. And I'm going to select this candle here today that we had at 9:30 a.m. right around, let's say, what do we close at? 1363. So 1363 up to our high of 1728. And we know that AMC typically pulls back anywhere between 50 and 61.8%. So what I'm going to do is I'm going to draw a nice rectangle in here for the next 3 days. Let's just say, if we see a pullback, this is the zone that I'm going to be looking at personally because we pull back 50 to 61.8%, which is between $15.03 and $15.46. Yes, we could pull back. It is entirely possible. It's also entirely possible for FOMO to settle in and we just absolutely go berserk tomorrow. It is also entirely possible that we do trade flat. I just want to give you guys every single situation so we can best prepare for tomorrow. But really, if we do pull back, this is the zone that I'm going to be looking at. And what would be awesome is if we did have this pullback, we consolidated here and had $15 as a new floor. We had $10 as a floor. We had $12 as a floor. And if we had $15 as a floor, holy crap, it's just the next step that we're taking on our route to the moon, guys. So that's just me, but let's hop out here to the year-to-date day time frame, and you'll see exactly what I'm talking about. If we take a look at the candlesticks over the past year, really 1653, the last time that we hit that was during the squeeze here over these past couple of days, the 27th, the 28th, 29th, and then here on the 1st of February. These are really the last points that we have after 1653. It's going to be the resistance of 1734, and then it's really going to be 2036. And really, once we get above 1734, I'm just going to put my hands up and say, guys, TA is completely irrelevant to look at. And if anyone tells you above 1734 that TA is relevant, I would slightly question them, because really with TA, you're supposed to go off of the most recent times. We zoom out here. Yeah, we can say back in 2019, we did hit above $16, but that's 2019 versus 2021. A lot of fundamentals have changed about AMC. So if we take a look here at the RSI, we're definitely overbought, and our MACD is definitely, yes, overextended. But like I said, take these indicators with a grain of salt, because we're starting to get to the point of uncharted territory. Also, keep in mind, none of this is financial advice. I'm not a financial advisor, and take everything with I say with a grain of salt. And please verify everything that I say. And if I got something wrong, drop it down in the comment section. Next, let's hop over here into Ortex and take a look at the short interest through Ortex. So we did see a positive short interest change of 3.96%, a net borrowed change of 5.11 million shares. We saw 7.88 million shares borrowed, 2.77 million shares returned. Our utilization sitting at 99.32%. I wouldn't be surprised tomorrow if we take a look at this and we're sitting close to 100%, if not at 100%. Which is going to drive up our cost to borrow, because there's not going to be any, in theory, short shares of AMC to borrow. In theory, keep in mind, Ortex takes this data that is reported to them. We know that these hedge funds, and we know from all the FINRA filings, that these hedge funds are definitely corrupt and have a lot of malpractice and don't report the correct data necessarily. So this is the absolute, I'm just going to say it, the bare minimum floor situation of what we're dealing with. 15.13% of our free float is short interest. We have 129.02 million shares on borrow. And our exchange reported short interest as of May 14th was 94.58 million. We know that a little bit of this has decreased, because our current estimated short interest is 80.8 million. Now, the next thing that I want to do is hop over here in the Stonko tracker, take a look at the calls in the money, 112,875. And then we have 25,000 short shares that are available to borrow. You can see several times today, there were 0 shares to borrow. So it's becoming an incredibly hard stock to borrow, which is going to drive up that cost to borrow fee. We have 15,324 short ETFs that are available to borrow. And at $17, we'll put another 4,331 calls into the money. Now, what I really want to do is I want to talk about these calls in the money and what this means. So if we close at above $16 on Friday, 112,875 calls are going to be in the money. So 112,875, we know that each options contract is worth 100 shares. So if we multiply that by 100, we get 11,287,500 shares. So that's if each person exercised their contract. That is a lot of shares. Where are they getting all these shares from? Well, I can tell you they're having a difficult time getting all these shares out, because if we zoom down here and take a look at our failures to deliver on the 30th, we had 198,447 failures to deliver, which is pretty significant for that. Now, the thing that I also want to take a look here is we have 73,846 shares, not shares, options out of the money right now. Now, if we take a look here in Webull and take a look at the options chain, we can see that the $20 and $21 strike have 9,457 and essentially 11,000 open interest contracts. These are the next huge points that we would need to get over. Now, the reason why I say this is because if we continue to bring calls that are out of the money in the money, it forces hedge funds to essentially, not hedge funds, hedge funds and market makers to delta hedge, which means they have to buy up shares because they have to be prepared in case if someone were to exercise that contract. And they have to be able to give those 100 shares. Well, I can tell you right now, with the failures to delivers being at 198,447, they're having a difficult time giving out options, giving out these shares legitimately. So what's going on here? Like, this isn't looking good. None of the math is adding up. And the math is not adding up even more because if we take a look at our short volume percentage over the past couple of days, it's been sitting above 50%, 60%, 61%, 57%, 56%, 61%. And let's just go for another one here. 49% back on the 17th. So we know that our short volume has been over 50% roughly for about the past 5 days, which is crazy. Now, if we take yesterday, we saw a short volume percentage of roughly 60%. So we pull out our trusty calculator here and we go over here in the Weeble and take a look at our day time frame. Yesterday, we traded 111.65 million shares. So let's go over here, type in 111, 65, 0, 1, 2, 3, 111,650,000 shares. And we multiply that by 0.6, we get 66,990,000 shares. That sounds a little fishy because we have a current short interest of 80.8 million. We have 129 million shares on loan to borrow. We know that retailers own a lot of shares. We know that insiders own a lot of shares. And then we also know that institutions own a lot of shares too. So how exactly are they able to come up with 66,999,000 short shares in one day when our free float is 450%? That, ladies and gentlemen, is the exact reason why this reported data is reported. The situation is a lot worse than what we're seeing because they don't want to admit it. And this is exactly the reason why this is going to be the mother of all squeezes, is because of all the naked shorting, the corruption, and all this stuff that is going on in malpractice that these hedge funds are doing because they just want to make money because they're leveraged suits that are trying to compete with one another to have a better return. And they're not thinking about all the malpractice that is going on and how it's affecting stocks. But that's what I got for you guys today. Really, let's hold on, diamond hands to the moon. Give yourselves a pat on the back. The situation is definitely a lot worse than what you're telling us. So, see you guys in the next one. Peace.